Hello and welcome to EduFund. In today's video, we have a very special guest with us, Satish Mishra from Tata Mutual Fund. Satish is a fund manager at Tata Mutual Fund and has been managing the Tata Midcap Growth Fund and the Resources and Energy Fund. Satish brings along over 17 years of experience in the Indian market. He has previously worked with HDFC Securities, Pink Research, IFCO. Qualification-wise, Satish holds a degree from IIT BHU and a PGDM from TAPMI. Let's hear from Satish himself about his experience of managing these funds and what investors should look at while they are looking at these funds. Welcome to the show, Satish.
Thanks, Neeraj. Thanks for having me in the show.
Let's start with the Midcap Growth Fund. Midcap, as you know, as a sector, has been seeing a lot of funds flow. How do you manage the stock selection when you are managing this kind of a fund?
See, at this point of time, when you look at a category like midcap, basically these are growth-oriented categories, and for a country which itself is going through a growth phase, so that way many of the growth sectors you will see they will fall under categories like midcap. So that way it's a very interesting category at this point of time, and definitely because of the performance, fund flows has also started. In fact, it has increased significantly over the past few months. But still, if you look at it is quite a diversified portfolio where you have contribution from more than 15 to 20 sectors into it. So still, I feel selecting stock is still not that big a challenge, at least at this point of time.
How do you tend to manage risk when you do not know when the funds are definitely going to come? So how do you tend to manage the risk of the overall portfolio?
See, how we do it. So fund flow comes to us is a second point. Okay. So first is when we build the portfolio. It is basically the philosophy on which you are building the portfolio. Okay. So first we think about the design of the portfolio and basically what you are trying to capture. For example, as I said, I believe midcap is the real proxy for the country's growth. And at the same time, you always see that there are many themes. For example, if I say some of the themes currently, for example, all this PLI scheme, manufacturing, electric vehicle, hydrogen. So you will notice that anything which is related to manufacturing, capex, industrials, you will find good representation from the midcap space. So first, we always go by what are the exact themes you have in your mind and how you want to build the portfolio. And then at the same time, then second, valuation comes into picture. So it is not that everything what you like, you buy at the same point of time. Because as I said, this category in general has more than maybe 18-20 sectors. And many a times, many of these sectors have their cycles as well. Some has a small cycle, some has slightly elongated cycles. So that way, when we keep getting funds, so our allocation towards different sectors, we try to play it accordingly. So it is not that you have just one theme and every time fund is coming and you are putting the money and you are basically chasing the stock. So because of its diversification, you try to deploy it in different sectors at different point of time.
When you talk about selecting the stocks, what kind of approach do you take? Will it be a top-down approach or will it be a bottom-up stock selection, or will it be a mix of both to have a diversified equity portfolio?
So in like in midcap fund, I actually go by both. So as I said, my belief is very clear in midcap funds. First is that any sector which is going to deliver you more than country's nominal growth rate. Okay, so in a fund like midcap, you cannot miss that. So first, I always start top down. Okay. Second, you have some sectors, as I highlighted these sectors along with say defense or some other sectors, China plus one related, premiumization related. So you will notice that at any point of time, there will be few sectors which have macro support or policy support, or say this demographic dividend rising per capita. These are helping it. So in midcap, first what I try that you just look at all the themes what are available in front of you.
Yeah.
And then within the themes, you divide them into two categories where you are sure that growth is going to be bigger, higher than say the nominal growth.
Yeah.
And then within category, I go completely bottom up.
Okay.
So it's mix of both.
Okay. When you talk about valuations, I mean, one common question which we have heard from our investors is that markets are at 73,000, it's very costly. Should I wait for a correction? Should I invest now? If in case I should invest now, what should be my approach? Should I go for a lump sum or should I take an SIP route? So what, according to you, should an investor who is a retail investor do at this time when he is looking to, take exposure to a Tata Midcap Growth Fund or maybe this kind of a segment which is going to generate some alpha over the long term?
Right. So see, I believe one way I always feel that we all are blessed to born at a time when country itself is going to grow at double digit in terms of nominal growth rate. Be you take 6 or 7% at GDP growth. So best part is you are looking at a country where nominal growth will be 10 to 12%.
Yeah.
Okay. And the second point is what I believe in a long term. Okay, in the near to mid term, all this news, all the sentiments, everything may have higher weightage. But if you look a period, longer period, say 3 years, 5 years or beyond, you will always notice that earning growth is the key thing.
Yeah.
Basically, ultimately, your fund performance should be reflecting of what kind of earning growth your portfolio is generating. And as I said, country itself is going to grow at 10-12%.
Yeah.
So in that case, I believe the category like mid-cap, again, because of all the focus, all the different initiative from the government side. And one very important thing what is happening currently, in India, basically, if you look at any major geography,
Yeah.
and there, for example, US, China, Japan, Europe, you will always notice that first it is always agriculture based economy, then manufacturing, and then services.
Yeah.
Whereas in India case, till 1780s we were talking about all the Harit Kranti, Doodh Kranti, everything, and then in 90s we got software.
Right.
So basically, what I feel currently, this whole manufacturing thing, somehow we completely bypassed that, or we didn't go through the full cycle of that manufacturing. And basically now government is fully focusing on that. And if you look at this whole space of manufacturing, industrial capex, you will notice that basically mid-cap is the category which is going to significantly benefit from that. So again, coming to my earthing point, what I believe that if you have a confidence of say 6 to 7% GDP growth, adding inflation to that, and when you are coming to a category like mid-cap,
Yeah.
so you will notice that your earning growth will further increase by 2-3%,
Right.
over and above the earlier categories. So when you are talking of a category which is going to give you such a good earning growth and for a good 5 to 10 years period, so I think in that point of time, I always feel SIP is best.
Okay.
Because for anyone, timing market is very, very difficult. So SIP is a no-brainer. But even if you are looking at lump sum, so again, there are 3 variables you should always look at. One is how is your earning growth?
Yeah.
So earning growth, I think mid-cap is very well placed for next 5 years plus period time. The second is valuation, and third is liquidity.
Yeah.
Valuation at this point of time, I believe, yes, as compared to large cap, maybe will be premium will be anywhere between 15 to 20% based on different reports. But at the same time, this category is going to deliver you at least 15 to 20% higher earning growth as well.
Right.
So on PEG ratio, price, earning and growth, if you consider all 3, so that way you can say valuations are not so steep. And at the same time, third factor is liquidity. If you look at the current SIP books and all the money which is coming into market, so considering all these 3, I believe it is not very important that at what point of time you are entering into the market.
Yeah.
Most important thing is how long you are going to stay into the market. So even if you are say you have a time horizon of more than say 5 years, and so even 100% lump sum at this point of time, I believe you will not be disappointed. But definitely if you have a shorter period of time in your mind, say 1 year, 2 years,
Yeah.
then you should look at asset allocation kind of situation.
Let's move to the next fund, which is the energy fund. I wanted to understand that energy by nature is a very capital intensive sector.
Right.
And it is significantly dependent on the macroeconomic factors, and also is some manner maybe cyclical also. So how do you go about the process of stock selection in that? That's the first question. And a follow-up question is, how do you manage risk in a very thematic sector oriented kind of a fund?
No, so right. So basically, as you rightly said, that's a mix of cyclical and non-cyclical sectors. So what I try to do there, so again, if you look at the sectors which are involved there, for example, we have power sector, we have cement. So these 2 are like infrastructure oriented. And then you have oil and gas, metals, chemicals, which are of cyclical commodity, semi-commodity kind of nature. So what I do with this fund is I mix a blend of cyclical and non-cyclical. So my approach always is that you don't keep a skew more than say 60% towards any of these categories, cyclical and non-cyclical. So idea is like this, 50% or say 40 to 50% of the fund gives you a consistent structural return. So that is set where you are basically chasing the volume growth, where cyclicality is not involved. So your 40 to 50% portfolio is positioned towards that. And what I do is in the remaining 50 to 60%, again, they all are cyclicals. And as I told you that all these cycles have different time frame. So again, there also what I do, I diversify them into the different cycles. So for example, if you will see currently my portfolio, roughly 40% is towards the infrastructure piece, power and cement. And then in remaining 60%, 55 to 60%, I have roughly 15 to 20% kind of allocation in each three pieces. Metals, oil and gas, and chemicals. So basically there again, those cyclical things I am diversifying into the three different cycles. So the idea is that it is very difficult even for us to exactly catch the cycles. But if you have a time frame of say 2 to 3 years, then you can capture the major growth of the cycles. So again, on the cyclical part, I diversify it into 2-3 categories. So that over the 3 years, 5 years time frame, you capture the cycle, and at the same time, half of the portfolio is giving you consistent. One important thing what has happened into this sector is, for example, you will notice that most of the stocks is like value kind of in nature. And again, another beauty of this portfolio is roughly, I believe, 25% plus minus will be the PSU stocks in these portfolio. So again, in the recent past, after the whole focus on power sector, cement sector because of this infrastructure, then solar, renewable. So actually many of the sectors have completely got revived in the last couple of years. So that way I believe this sector, though definitely it's a sectoral theme, but it is not as concentrated as any other sectors. For example, if you talk about any other sectoral funds, you will notice that it is only one theme. But here you have at least 5-6
interlinked things.
5-6 broader sectors as well. And there also, like for example, in chemicals also, what I do, I try to play, in fact, in chemicals, you have 3 things to play: agri input, agri commodity, and specialty chemicals. So the idea is that in the cyclical piece, you diversify, you give time, so you will benefit from that, and half of the portfolio keeps giving you consistent return.
When you're managing this kind of a heavy sector, a lot of things are also dependent, and most of these products in these sectors are commodity linked, and it is dependent on the currency also. And if you look at the rupee, there have been a consistent depreciation over the last couple of years at a rate of roughly around 3 to 5%. So how do you manage that? Like, does that really play too much of an importance when you are selecting the stocks? How do you go about hedging the currency part of it?
No, actually it's a very nice question. So again, what happens in some of the sectors, for example, in some of the chemical stocks, you will find that they are export oriented companies. And in others also, basically what happens even in the sector like say for example metals, chemicals, your realization is linked to international price. So basically depreciating currency benefit these players. And like as you said that in India we see some depreciation every year. So that way the pressure is not on the hedging part. So not much of energy goes into hedging currency risk. But definitely, as I told you that in fact your first point related to the macro policy and everything. So that is another reason why I go for diversification. Because you really cannot be sure. Because many of these sectors, for example metals, it is completely dependent on what China is going to do in their budget. Similarly for other commodities, oil and gas, Russia, OPEC, they have a very big role to play. So the whole idea is that you try to increase your weight at a time when valuations are slightly in your favor, and you give it time, and you make money over the cycle of 1 to 3 years.
And how does the market cap allocation of this particular fund looks like? Because I think since it's very capital intensive, would you only see a very high tilt towards the large cap, or do you also have mid and small players in this sector?
No. So again, a very nice question. So what I have done in this portfolio, Again, at any point of time, I try that allocation to the large cap is not more than 60%.
Okay.
Because basically what is happening, most of the activities, and even if you look at the government's plan towards some of the champion sectors, you will notice that this mid-cap, small-cap space is going to benefit significantly.
Yeah.
So even in this fund also, I believe over time, you will see that 40 to 45%, at least 40% plus, I try exposure from mid-cap and small-cap. So at any point of time, I don't think large-cap exposure will be significantly above 60%.
You also mentioned about power and the renewable sector. So renewable is picking up very significantly in the country because of the government's push also, and because of many schemes which has been recently announced. So do you see a rising exposure towards this kind of a segment, and what kind of a market cap allocation is seen in this kind of a segment?
Right. So again, see, definitely power sector, I'm very positive. Okay, the reasons are very clear. You are seeing that even from the personal consumption part, our per capita is increasing, lifestyle is changing, premiumization is happening.
Yeah.
So even at home consumption level, you will see power demand will increase. At the same time, we are seeing that focus is fully on manufacturing economy.
Yeah.
So again, anything related to manufacturing will require energy.
Right.
So even in next 3 to 5 years, you will see significant increase in the industrial power consumption.
Right.
So as a theme, we are very sure that the demand for power is going to increase very significantly. Now the thing is, if you look at the breakup, so again you have some conventional power based on coal and all, and then you have all the renewables.
Right.
So in fact, you will notice one thing, that say 2-3 years, a few years back, everyone was completely no to the coal-based and conventional because of the ESG and all.
Right.
But the matter of fact, reality is that power demand, the way it is going to increase. So now in India, even we are seeing new coal-based power plants are coming.
Yeah.
So how I have positioned my portfolio, because what I believe is valuation is always very important.
Yeah.
Okay. And now what happens many a times, stocks price runs ahead of its fundamentals.
Yeah.
But at portfolio level, we try to keep ourselves in check. So we give time to our investment. That is one. And second is, we go with the companies which have proven track records. We doesn't chase the theme. Okay. And many a times what happens, like for example, if you will look at our portfolio, so though the names are conventional, but at the same time you will find even the conventional players have a renewable portfolio, which is significantly higher than the many standalone pure-based renewable players. So the idea is that, again, very same fundamental. You stick with the earning growth and keep valuation in your mind. So these two things I try to apply here also. But I'm very, very positive on this power energy theme.
One last question on this similar fund. Like, this fund is very thematic and sectoral in nature. So definitely, naturally, the risk is probably going to be a little higher than a broad market fund.
Right.
So for a retail investor, how should they participate in this kind of fund, and what should be the horizon which they should look at?
See, one thing what I always believe is the sectoral funds, allocation towards sectoral fund should not be significantly high in your portfolio, maybe 20 to 30% based on your appetite.
Yeah.
Because what happens, it is very difficult for anyone to time exactly when to enter, when to exit. But at the same time, you know that some of the things, for example, as I said, if next 5 years, I believe focus will be towards taking India from, say, 5th largest economy to 3rd largest economy. And that is only possible if you focus on the capital formation.
Yes.
Be that public capex, be that personal capex, be that corporate capex. So I believe these cement, power, energy, so some of these things are really going to play. But still what I feel, if someone is coming to these funds, they should have a minimum horizon of 3 to 5 years. Because then only all the cyclical part which I just explained, they will capture it. And in fact, it's this fund is, I believe, 8 years old fund, 7 to 8 years old fund. And you can see the long track record.
Yeah.
So you'll always see they does good in long time frame, because one or the other cycles help them, and then half portfolio which are structural in nature gives you consistent return.
Okay. So that's all from our side, Satish. It was wonderful having you. Thanks a lot for your time and wonderful insights which you have shared with our viewers. I'm sure our viewers will definitely take it ahead some of the learnings about these two funds which you are managing and would accordingly make decisions to participate in their investment style.
Thanks, Neeraj, so much. And my last line, which I always say to everyone, is don't focus on timing.
Yeah.
Spend the maximum time, and you will be happy in the market.
Yeah.
Thank you, Neeraj.
Thanks a lot. Ladies and gentlemen, that's Satish Mishra from Tata Mutual Fund. He manages the Tata Mid Cap Growth Fund and Tata Resources and Energy Fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.